Hello everyone, Ugodre here, and this just happened. So the Central Bank's Monetary Policy Committee just concluded its meeting today, and they made an important announcement. They announced that they have voted to keep MPR at 26.5%. If you're wondering what MPR means, MPR is an acronym for Monetary Policy Rate. Of course, the MPC is Monetary Policy Committee. So the MPC met and then they agreed to keep rates at 26.5%, which is monetary policy rate. So that 26.5% is the rate at which the CBN borrows or lends money. It's the benchmark for borrowing or lending money to banks. But it's more important for you and I because that determines how much interest rates we get on our loans or our mortgages or whatever it is that you borrow money from the bank, or if you intend to go to the bank to borrow money, because banks tend to add a premium on that 26.5% and then lend to you. So let's say your interest rate from a bank is like 35%, then it's because the bank has added a delta on the 26.5% MPR. Now, if the CBN had decided to cut rates today, then be rest assured that interest rate may have come down. Your interest rate or your borrowing rate may have come down as well. But if they had decided to increase it, then you're almost sure that banks will immediately write you to increase, the interest rates as well, or the lending rate to you. So by and large, they decided to keep rates flat, which is what it's been since the first time they cut rates earlier in the year. They've only cut rate once in a long fact, since maybe 2023 or so, we haven't seen a rate cut more than once in Nigeria. And the next time they're going to meet again is in September. So this is likely going to be the interest rate that you get, the interest rate environment from now until September. So don't expect to see your interest rate come down, except maybe you have very good negotiating skills with your bank. If you're wondering why did the CBN decide not to cut rates or to keep rates stable, well, they said yes, inflation numbers are going down, which is fine, but not going down, fast enough for them. And they're particularly worried about something: food. So the latest inflation numbers showed food prices went up month on month by over 3%. That is a drastic increase because inflation numbers month on month typically go up by maybe 1% or 0 point something percent, but food went up by more than 3%. So that is a very dangerous signal for the central bank. And it's a dangerous signal for all of us because it does mean that there is potential for interest rates or for inflation rates to tick higher, and which is not good for us. Now, they also cited the war in the Middle East as a major concern for them because they know that typically piles pressure on cost of goods and services here in Nigeria, particularly petrol costs. So that's a major concern for them, and this is one of the reasons why they've decided to keep rates the same. Now, they were kind of happy that in terms of macro stability, things were still fairly okay, which means if things were probably worse than it is, they probably may have even increased rates, because to the CBN it's more important for them to keep rates steady, if not higher, because they don't want to jeopardize the stability we are seeing in the exchange rate. That appears to be very, very important for this CBN. And so that is why they're keeping rates stable. It's important for them to ensure that exchange rate remains stable. I mean, ask yourself, what would you prefer? Would you want lower interest rate and a naira that is weaker? I don't know. I'm sure a lot of people would probably prefer a stronger naira than to a lower interest rate. So it all depends on the choice you want, but it appears that the central bank prefers to have a naira that is stable, even if it means sacrificing interest rate and keeping interest rate higher for obvious reasons. So that is what just happened. Let me know if you have other questions and other ways you want me to explain this, and I'll be happy to do that. All right, bye.